Okay, welcome, guys. It is Tuesday night, August the 5th, in preparation for Wednesday, August 6th, trading day. And, buddy, no, I'm not answering your call. I've already chided myself. I already gave myself the talk. But hey, let's move on. All right, so we're going to continue this interview with Roy Longstreet before we jump into the market analysis here. Um, Roy Longstreet is being interviewed by oh, what was that magazine? Dang, I always forget. Intermarket Magazine, and so they're abbreviated as IM, and Roy Longstreet is Longstreet. Um, Pick back up where we were. Sorry, hang on. Um, Sorry. Okay, here we are. So he had just finished talking about are you making the most money you've ever made in your life? He said, no, I don't want to make the most money. What I want to do is operate based on principles. And he talks about operating based on principles, which is important for me to reiterate after today's trading. So, okay, so IM says, were your trading capacities at higher levels in the 1960s than they are today? Longstreet says, well, I wouldn't say so. I'll put no limit on the amount of volume I'll trade today, although I do insist that I examine my position in terms of moderation. IM says, there was a time where you didn't use moderation? Longstreet says, yes. IM says, what principles other than moderation and strong belief do you base your trading on? Longstreet says, detachment, lack of emotionalism, patience, moderation. They are all interrelated. If I don't trade in moderation, I'm not going to be detached. So let me repeat that for those that are trying to scale up too big. We got to have that detachment, that lack of emotionalism, patience, and moderation. They're all interrelated. If you don't trade in moderation, you're not going to be detached. So that has to be balanced. This is me inputting on this. That has to be balanced with the pushing ourselves to those limits, but yet not make it so big that we become so emotionally involved in the trade. All right, so IM says, how can one pyramid and still remain detached? Longstreet says, why does one trade? Is it to make money? Or is it the process of growth for the individual, self discovery? If it is the later reasons, you do not want to place limits on it because it may be necessary for you to pyramid in order for you to find out who you really are. IM says, after pyramiding his way to 30 million, did Tom Jordan know himself? Longstreet says, no, not really. But he taught me one thing that I had not thought about, but worked very well for me. And that is concentration. You should concentrate on one thing. You should be so involved in that one thing that you will attempt to become the master at it. You no longer need to trade everything. That answer in self discovery is to attempt to do something that you've never done before. Make the attempt so you can discover yourself in the new experience. The person's role in his trading is the most important element in success. People don't think they need to know themselves. Well, that's ridiculous. Most people tell me, well, I know as much, I'm sorry, I know myself as much as I need to. They are wrong. IM says, what do you know about yourself today that you did not know in the 1960s? Longstreet says, I know that I am a body that requires meat, potatoes, etc. I also know that I am a soul that requires my ability to convert adversity into success. This to me is very significant. You never grow without adversity. It's all in how you handle it, not the fact that you have it, but in how you handle it. Having it means nothing, but if you can manage your thinking so that you are not upset by it, that is growth. IM says, did you ever put yourself in a position in trading where your being wrong would wipe you out? Longstreet says, yes. In the beginning, many times, I'd have to call my wife up and say, can I have another $100? She'd ask, well, what happened to all the money I'd been trading? It's gone, I'd say. Too many times I'd call her up and she'd make the journey to bring me $100. I have been wiped out many times, and I might get wiped out tomorrow. What I'm talking about might not fit anyone else at all, but it fits me. I feel like I'm making progress, that I am a different person that, that I am a different person that I was when I began trading because I have experienced self-discovery. Not that I have discovered everything about myself, but I am perfectly willing to have enough courage to admit that there is something that I do not know. IM says, how will you handle yourself if your positions go strongly against you today? Longstreet says, I may close them out, but it won't bother me. I have arrived at the point where it's necessary for me to have adversity occasionally. I can truthfully say that those positions could go against me and I could close them out for a decent loss, and yet I could be thankful for everything that happened. IM says, you're thankful when the market goes against you? I am thankful. It is difficult, but it is necessary. When do you take a profit? IM says. Longstreet says, well, I foolishly operate on signals. I believe I do not know all the signals, but I know some of them, and I compliment myself in that I have enough courage to act when I read that signal that is given. I have simplified markets into certain patterns. One involves a market rising from a bottom. Another is a falling market. Basically, the trend is your friend, and I look to latch onto a trend. IM says, so you bring home most of your positions overnight? Longstreet says, yes. Very seldom do I get in and out during the same day. IM says, do you feel comfortable initiating a position towards the end of the day? Longstreet says, the only time I'll feel comfortable taking a position near the close is on a limit break or a limit rise. I feel that there's terror and haste in a market activity on or near the close of a market. There's terror in being forced to do something that you don't want to do. I'd rather do it because I believe, and if I am believe, then I'm ready to take a position almost any time. IM says, were your most successful trades very long-term trades or trades that you held for like trades that you held for months? Longstreet said most of the most successful ones were very long-term trades. IM said, do you ever put all your positions on at once or do you always stagger into them? Longstreet says, sometimes I'll put on a very small position all at once, but staggering in ties into the principle of patience. Quite often, I will put on even a very small position in a very gradual way, just for discipline. I add on not because the market has gone up, but because it complies with what I think the market should be doing. I almost always stagger into major positions. Every order I put in usually is a market order. If the market is not acting as I think it should, I refrain from trading or adding on. I don't know whether I'll be successful on any big campaign I undertake, but I have to exercise discipline. As it goes with me, I feel good, but I don't want to feel too good. I am long gold from a much lower level, and today it's down $8. So what? Nothing goes straight up or down, and the market makes mistakes. I think this is a mistake. IM says, who were the great traders in your lifetime? Longstreet says, Arthur Cutten was one of them. He was a Canadian who started with nothing. When he lived in Chicago, he was successful as a commodity trader. But when he moved to New York, he became a victim of Fibonacci numbers and he died poor. IM says, how wealthy was he in his day? Longstreet said, I have no idea. It was in the hundreds of millions for a brief time. I never knew if he traded intellectually or not. I have a feeling he was good at catching emotional swings in the market. IM asked, how about Jesse Livermore? Which, like I've mentioned before, the Jesse Livermore book, we believe it to be a autobiography of Jesse, written by Jesse Livermore, but it's not credited to him as the author. That'll be a good book to read at some point. So Longstreet's answer to that was Livermore was a swinger. As a trader, he never gave up. Well, I guess he finally did because he shot himself. Dan Rice was a great trader who I found myself time and again opposing. I remember the wheat market in one year. I forget the year. I was party to the pushing of the wheat market up and a lot higher relative to what you could buy wheat for in Michigan and deliver to Chicago. So that's what Dan Rice did. IM asked, was W.D. Gann any good? Longstreet said, what little I know came from an attempt to apply his technique. I must admit, I never did learn it. I believe he was a tremendously successful trader, but my attempt to learn it and apply his technique as I understood it, as I understood it, was for me a complete failure. Okay, we'll pick back up on that tomorrow. Let me get my marker place here. Okay, jumping into the markets here, we've got on the daily chart here. I wanted to kind of zoom out here a little bit and show this. We've had, I kind of marked it off by these yellow lines, kind of the sideways consolidation we broke out of. We came back down. Let me zoom in for those of you who have smaller screens. So we broke out of this sideways consolidation, broke out to the upside. Then we came back, broke down to the low side of that box range, only to immediately shoot back up above that box range. And you notice today we closed above that box range again. So we kind of came down to it, but yet nevertheless we did close above it. So I want to be conscious of that. We've done a 1 day flip up, which is today. This is no, I'm sorry. Oh yeah, this is down here. So I'm sorry, 2 day. So we did do 2 day flip up in the 2 period rate of change. Yesterday was 1 day, and then today, even though we closed down, was technically a second day flip up in the 2 period rate of change. So again, keep in mind we did close above that box range for now. And like I said, we shot down to the low side and immediately reversed that. So that's something that I definitely want to pay attention to, whether we're going long or whether we start oozing back down into this again. Obviously, if we start oozing back down into that box range, then I'm going to want to short the shit out of it. If we maintain and kind of hold above it, I want to be conscious of being a little more long-minded on that. Now, that being said, on the LBR 310, we've been pointing this out for weeks, months, or whatever, months since it's back in April, that we've come up here positive on that slow line. Our last low number was back at 1741 on that slow line. We are currently we were at 1313 when I wrote this. We're now down at 1310 on this slow line. As I mentioned yesterday in the video, I believe we will dip below that, and that could lead to additional downside. It's just how many days of price overlap are we going to have before we finally fail that? Again, currently we're at 1310, kind of oozing down towards that zero mark on that LBR slow line. The 65,000 tick, let me drag that over here. Okay, so this is, we did this A, B, C, D, E, moved back up, took out that all-time highs. Then we shot down. So this is quite an impulse move down. So the thing I have here is on this impulse down here on the 65,000 tick zone. Are we in a green? Did we hit a green whack-a-mole zone on this divergence here? My assessment is yes. This morning we did hit that green whack-a-mole zone here. But you can see here now on the 65,000, we're kind of made this little divergence on this new where am I? On this new low here that happened so far in the Globex session. Oh, geez, come on, come on, I'll get this here for you guys. Hang on. So we made this little low poke here on this little bit of divergence. So are we in a red zone loading for a test or take out this high for what could be an A, B, B, C leg, or was this our whack-a-mole zone and we're looking for that move back down as a simple flag? So here's what I don't know at this moment. I don't know if we're going to do this A, B, C, or if this was just a simple flag, a bear flag that we're looking for a further move down. I'm going to kind of taper that with the fact of on that box range. So I'm going to be paying attention to this box range we had on the daily. Are we moving back above that box range, for possibly a C leg up? Or like I said, on the daily, are we going to ooze back down into this range? In which case, then I would be looking for reasons to get short on. Also, I wanted to show you on the 60-minute. So on the 60-minute so far, we're riding the 20 period moving average. Oh, sorry, this blue, if I can get it here. Boom. There you go. So this so far we're kind of riding the lower end of this 20 period moving average on the downside. So if we continue that tomorrow, obviously then that would yield to more oozing back down into that box range. Or like I said, we need to be aware of and not get overly bearish because we could have that A, B, C type move. And if we have that other second measured move, off this type thing, then that could take us up here, pretty good extent up here. I don't know what the measure move would be, but I have this 21 and a quarter marked above. So let's go ahead and say that as a potential move there. Like I said, right now on the 60-minute, as of this moment, we are showing that slow line, a little bit of bullish divergence. You're seeing that on the 2-period rate of change on the 60-minute as well, a little bit of bullish divergence as we came down here and kind of tested and took out these lows here a little bit. So for this moment, it's looking bullish. But like I said, I have reservations on that. Okay, so let's look at the gap chart that I have here. Currently on the 15-minute, the prices at this moment is trading at 63.21, which that has us down, 63.20, 21 zone, somewhere down in this zone here at this moment. So right now, even though there's a lot of bullish type signs on those 60-minute and 65,000 tick charts, right now on a intraday basis, it's looking a little bit bearish. We're below close on today. So we kind of moved up, down, potentially a lower high for this move back down. So because we're here, there is still a potential coming down and filling this gap down below. So we'll keep an eye on that as well. Again, I think that all plays into, are we moving back into that daily, let's pull it daily. Are we oozing back down to this daily box range for potentially that gap fill? No, where did I go here? Sorry. Oh, nope, that was on the gap chart. Sorry. I'll get my wits about me here in a second. All right, so the internals. So again, that's the dot D or the intraday chart. On the internals, this is where a little conundrum comes in here. We are, 3 points up from this low. 3 point up from the low is bearish at 1770. So above 1770 is bearish. However, 3 points down from this high is bullish below 1890. And here we are sitting right in the middle yet still. So unfortunately there's no predictive ability in the VIX at this moment because we're bearish and bullish and we're right in between there right now. So it is a possibility we could get a little more just price overlap tomorrow. I don't know that I anticipate another trending day tomorrow. Obviously that's always a possibility. But we're going to kind of see if we slop and chop through that trickle down of that price overlap area, or if we get kind of a directional move to the upside above that, or if it just does a directional move back through it. So those are all things we need to keep an eye on tomorrow. That's it. Oh crap. Wow. This is a 50-minute recording. Oh no, it may not be a 50-minute recording, but I've had my screen up for 50 minutes on that. All right, guys. Hey, happy trading, trade safe. Buddy, I hear you lashing out at me. I appreciate it. I appreciate the encouragement and the chiding both. We will get back on board, get back in the saddle tomorrow on this. So let's help each other out, continue to help each other out. And when one of us are doing dumb things, especially me, if I'm doing dumb things, let's bitch slap me or whatever you need to do. All right. Talk tomorrow.